U.S. growth in 2018 has been nothing short of spectacular, and so the question as we look into 2019 is whether the U.S. remains that leading economy or not. And I think the answer is both yes and no. I think yes in the sense that we are forecasting U.S. growth in an absolute basis to still be faster than most of the other countries out there, but appreciate the U.S. speed limit is also probably a little bit higher, and the U.S. is coming off a really quick year in 2018, and so we say, yeah, growth should be fine in the U.S. next year, but it may also slow more than in many other countries. So we have the U.S. decelerating more, even though the end result isn't all that bad. And the reason we have it slowing really is threefold. One of them is protectionism, and protectionism hits everyone, but of course it hits the U.S. and China the most, and so that's part of the equation. We can say that financial conditions are tightening around the world, and that is code for saying higher interest rates and wider credit spreads and weaker stocks aren't great for the growth outlook, but it's been more profound, I would say, in the U.S. perhaps than elsewhere, just in the sense that U.S. rates have gone up more and the U.S. dollar has gone up too, which is a further drag. And then lastly, fiscal stimulus. And so the U.S. had this big tax cut package, really drove growth forward. It's not done. In fact, technically, there's still a little bit of a helping hand in 2019, but it's a much less powerful helping hand, we think. So it still speaks to a slowing U.S. economy. And in terms of our own asset allocation to that end, and also motivated by valuations, we've been shifting out of U.S. equities to some extent and more into places like Europe and the UK and Japan.